Hello, everyone, and welcome into crushthestreet.com. We're going to have a brand new interview today, and we're going to be discussing crypto, the crypto market. And many of you have probably seen the crypto market get, quote unquote, smashed as of lately. Bitcoin went under that $6,000 level with some decisiveness. And we're going to get the thoughts and the analysis of Doc Severson today of ReadySetCrypto.com. He's got a very popular YouTube channel and website. And one of the things he has just said, which I think is very relevant, is that we need to stop treating crypto like it's 2017 and start moving forward. Having said that, Doc, thanks for coming on the show with me today.
Oh, sure. Thank you, Kenneth. Appreciate the invite.
Well, let's kick it off here. What are your thoughts on the market in general? Having seen what we've seen with the price action, I'd really like to start here because, everyone's seeing the Bitcoin price collapse down below the $6,000 level. We're seeing a lot of headline news about this. If we could start here, what are your thoughts on this?
Well, sure. We've been in a primary bear market really since the late winter, early spring. And I think I've been through so many different bear markets over the years, and they all end up sort of the same way. And I hate to kind of classify them in that manner because everything is a little bit different. A lot of people were saying, well, we may not have a final capitulation in this market because of the miners. And we've seen that that's not the case. So everything ends up sort of being the same way. But when we talked about being in the bear market, as we got down to volatility collapsing into next to nothing, that was maybe terminated a couple of weeks ago, a lot of people were saying, hey, maybe this is it. And to me, and this was not a very popular opinion, and nobody wants to really hear this, but I said, no, I want this thing to get crushed. I want to see the Band-Aid get ripped off, because the only way that I've seen a bear market, a true bear market, recover is to get that final capitulation. And the final capitulation is something that we'll see across the board, because what you'll see is that it'll be almost universal. You'll see just about every single article, and sites like Cointelegraph will be negative. You'll see everything on CNBC crypto will be negative. Is this the end of crypto? Those kind of things. You'll see across the board, retail traders will go, all right, dude, that's it. I've been hodling for the past year and I can't take it anymore. So you'll see this sort of collective capitulation happen where people say, this thing's dead. It'll never recover. It's gone. And I say that because I've been through these so many times before. I went through the full financial crisis back in '08. And at that time, I was like, wow, this could really collapse. It could really collapse. And we almost got to the point of no return. And then all of a sudden, what happens is just when people walk away, just when people give up, the majority give up, all of a sudden the market starts to rally. And there's actually a name for this. This is called the disbelief phase. And the disbelief phase means that nobody is on board that rally, because everybody's like, oh, hell no. You're not going to catch me I've been buying the dip all the way down and I've been run over. And so people stand to the side and go, nope, this is not a real rally. You're not going to catch me. And it will take off. It will take off and it will have nobody on board. It's like the proverbial train that leaves the station and there's no passengers on it. So this is what will happen. I've seen this so many times before. So right now, kind of what I'm hoping for, and again, this is not a popular opinion. This is not something that people want to hear. But I want to see this thing do a waterfall decline. I want to see this thing just drop right off the end of the table, huge volume spike, negativity everywhere. And that will be the beginning of the end there for this bear.
Doc, I'd like to extrapolate this a little more here, and I'll bring up this. So the Bitcoin Cash hard fork, Bitcoin ABC, led by Roger Ver, and the Bitcoin Cash SV by Craig Wright. And I couldn't help but notice basically the entire cryptocurrency market falling during this time. And I think a lot of people are seeing this. And what are your thoughts on this and a hard fork really instilling a lot of fear in the overall market?
Well, there's a couple of things here. Now, I'm not going to speak to this fundamentally. So my business partner Mav, who many people are familiar with on the YouTube channel, he's got this one down. He understands all the dynamics and the politics behind it. Again, I kind of stay away from that. I go back to an old floor trader axiom. And the floor trader, you guys have seen, the trading pits where everybody's in there just, yelling and punching each other and things like that, kind of the old school method of trading. And we're starting to see that phased out, but there's a lot of knowledge to be learned from these pit traders. And one of the things that they always talk about is when in doubt, palms out. So an old floor trader sell signal was like this, palms out, meaning I'm selling, I'm selling, I'm selling. So that's something to keep in mind, is that when you have uncertainty, when in doubt, palms out, you sell. So people are doing what they're supposed to be doing right now. When uncertainty comes along in the market, they're dumping first and asking questions later. So this whole hard fork thing left a lot of uncertainty into the market, and we're still dealing with that to this day.
All right. So I got to ask a question that many skeptics are asking right now. And in this situation with the hard fork, if there can be a right turn and a left turn out of nowhere, and this major amount of fear that enters the crypto asset market, how does this, if you believe cryptocurrency or a specific project is sound money, how does it represent sound money if this can happen at any given time?
Well, I would reflect that question back to any asset that's out there. Any asset has supply and demand behind it. You can look at assets like Nvidia, look at assets like Apple, if you want to look at the stock market, and those have been getting crushed lately. So what was just, a solid asset nearly 2 weeks ago, all of a sudden people are walking away from it. So you're going to find the same thing. An asset's value is all, not always intrinsic. It's going to be extrinsic as well too, which is kind of goes into my world, which is derivatives. So there's a lot of extrinsic value in everything that we deal with, especially in crypto, because we're looking at forward value of everything. So this is much like what we went through back in the late 90s with tech stocks. Like, well, we're looking at extrinsic value, the forward value of this company, which we project to be worth X amount someday based on what we think they can do. So this is the nature of financial markets. We're always dealing with intangibles where we don't know the answer to. And actually, a lot of retail traders trade off of tangibles. They trade off of things that are already known, but the market that they trade is already gone past that. Nobody cares about that anymore. So the market's always looking 6 to 9 months ahead of time. And that's just the nature of the world that we live in, is uncertainty. Without uncertainty, though, you have no opportunity.
I like that. Well, and I would strongly agree with what you said there. There is no certainty when it comes to your savings and where you put your money, which is why I strongly recommend that you have your money in multiple savings vehicles. All right, so let's get into a little more of what you do specifically, and I'll start you off with this question here, and I'm curious to hear how you respond to it. In the dot-com era, you brought that up a little bit there with the 90s and into the dot-com bubble burst. You had traders quitting their jobs to become full-time traders. In 2017, we saw the same thing. You have people just, throwing money everywhere, trading and making money. You go to these Bitcoin meetups, everyone's a trader. What is the market now, and do people make money in bear markets trading?
Well, it's funny you mention that, because right now it's still a bear market. And so if your only avenue is to trade long, to the long side, then you're basically a counter trend trader. And to play counter trend, you've got to go down in time frame. So you've got to be almost a scalper, because again, in a primary downtrend, you're only getting occasional retracements, and then the primary wave takes over again. It's my personal opinion that I think most retail traders should stay away from shorting the spot currencies. So not every broker will allow you to naked short the spot currencies to begin with. So there's only a small selection of them that allow you to do that. But in my mind, I think it's just a bad idea, just because of the fact that not only are you being charged interest, you have to find something that's not hard to borrow. There's all kinds of obstacles for that. That's actually why I believe that derivatives are going to be the story of 2019. So not only are we're going to see a whole flood of entrants that I believe are going to be into the market here fairly soon that allow you to trade just as easily to the short side as the long side, and also allow you with leverage and allow you, it's a very frictionless trade, if you will. Whereas I look at something like naked shorting of a spot currency as a very frictionable trade, a very difficult trade to execute like that without baggage to it. So 2019, we're going to see more and more and more of these platforms. So like obviously BitMEX is the big dog in the space right now, but we're going to see other players like Digitex coming along. So they're just about into beta right now. We're going to see DYDX. We've already got Deribit, which is out there doing futures and options. We're going to have, let's see, what is it? Crypto Facilities is another one. So a lot of them are going to be based on the KYC. You know, can you actually trade with them, or can you loophole around it and find a way to do that? But 2019, I believe, will be the way for retail traders to use derivatives. And quite honestly, we're not going to get institutional involvement into this space until they offer a full suite of derivatives, because institutions will not trade something without risk management, without risk control. And you don't have risk control unless you have options.
So you touched on the derivatives and kind of how that's going to expand in 2019. So I'm curious, what are your thoughts on how the SEC and the CFTC are going to treat this going forward? Do you believe that there's going to be kind of a relaxation of the crypto space and kind of give the A-OK for cryptocurrencies to move forward in a way? Because I feel like that's a big reason why we went into this bear market. We got the news from, you know, the regulatory agencies, and we kind of turned around. It kind of signaled the turnaround. I mean, it was due to come at some point, but it seemed to correlate strongly with the news out of the regulatory environment. So
it kept the downside coming because, again, uncertainty. More uncertainty means the downside continues to go. So 2019, yeah, I do believe that I think there's going to be so much pressure on these regulatory industries because, look, the big boys are coming into the space. Fidelity has already mentioned that they want to get into the space. TD Ameritrade has already mentioned that they want to get into the space. The CBOE, CME are going to be all offering products. They view this as like, wow, this is a greenfield territory that really nobody else is servicing yet. And there is going to be money driving these things. If there's money driving these things, there will be political pressure to do something. And then there's, again, the U.S. doesn't want to be viewed as getting behind the ball, right? We don't want to be behind the ball. We want to be at least ahead, or at least, you know, somewhat in the middle of the pack there. We don't want, you know, countries like Malta to be viewed as the be-all and end-all of technology in terms of the next century. So, yeah, I do see 2019 is going to be a watershed year for this, but probably in the back half of it, definitely.
So let's talk about 2017 a little bit more. This isn't 2017, but how big of a deal was 2017 for the build out of the fundamentals of cryptocurrency?
See, I think 2017 actually did us more of a disservice than anything else, just because of the hypey nature of it and so many similarities to what we saw with the dot-com boom in the 90s and, you know, the whole pets.com thing. We had a perfect analog to the pets.com. We had all these trash ICOs that came out, many of which are failing right now. So this is what bear markets do, is that it's almost like a forest fire. And I think we're all aware, and, you know, all respect to California here, but forest fires are a naturally occurring phenomenon that ultimately over time are a positive thing, not necessarily for the humans that are living in that area, but again, so you can kind of burn up the old growth and so that you can have new things come from it. So we're going through the forest fire that was lit in 2017. And so we're seeing all kinds of positive things happen right now. So I think STOs are going to be phenomenal going forward in 2019. And we're going to see market capitalization and funding of companies like that, tokenization of companies that were unable to get into capital markets before. So this is going to be all kinds of different ways that we're going to see small business take off. The U.S. has got to support this if it sees what's good for it.
So who do you see being the biggest antagonists of these STOs and the tokenization of companies, competition to the traditional equity markets? Who do you see being the biggest people that fight this and resist?
Oh, well, that's a good question. I haven't really thought about that before, but what strikes me would be the existing power structure, such as the Goldman Sachs of the world, saying, wait a minute, this is a threat to our ability to be able to do initial public offerings. And so all of a sudden, all of our initial public offering business is going to go away because people will tokenize their businesses instead. Or, I mean, who knows? Maybe we're going to see Goldman Sachs say, well, we could either fight this and be on the trailing side of it, or we could be on the leading side of this and help push these things. I don't know. I don't know how they're going to respond to that.
All right, Doc. Well, I appreciate your time here at Crush the Street. I want people to be able to know what they can get and what they can expect to find if they visit your website, visit your YouTube channel, what kind of services you provide. I greatly appreciate your time here at Crush the Street. So how can people learn more about what you do?
Well, a lot of different ways. First of all, we do have a YouTube channel. You're welcome to subscribe to the YouTube channel at readysetcrypto.com. So we've got, a year and a half worth of videos that are out there. And we also include every podcast that I do as well, too. So that's one way. You can also go out to readysetcrypto.com, and on the very front page, you can opt in to our free newsletter. If you do our free newsletter, which we send out 5 days a week, you'll also be included in our crypto college. So we've got basically a 3-hour crypto class with various modules that you can work through with quizzes and online. So if you're new to crypto and want to get up to speed in a hurry, you can go through the crypto college. For those that want a little bit more, we also have a premium newsletter which comes out 5 days a week. So we're looking at the markets live every single day. We're looking at trades to make. We're looking at moves to get into. We're looking at the latest coins. And we also have a number of classes. So we've got at least 10 premium classes that are out there. In fact, I'm doing one tomorrow. I'm doing a free presentation on trend trading, trying to bring the trend trading and the turtles over to the crypto world. So if you get on our newsletter, a free newsletter for today, you'll be invited to tomorrow night's presentation on that.
All right. Awesome. Well, sir, thank you again for coming on Crush the Street. And I look forward to speaking to you in the future about the changes and, how everything is developing in the crypto space. What an exciting time to be alive.
All right. Thank you for bringing me on, Kenneth. It was nice to meet you.